All right, so welcome to 10-6 Life Factors. We have Grant, and Grant is going to share all about what he actually do. And we're here to talk more about short-term rentals. And he's an expert in tax accounting and other areas. So I'm going to allow Grant to share his
Awesome.
background.
No. Thank you so much for having me on. It's an absolute pleasure. I don't know why every time I get a chance to talk about something that is like most people consider taxes boring, but I actually get very energized by the type of stuff. So, I'm excited. I am an enrolled agent based out of Houston, Texas. I work with taxpayers and different clients all across the nation, but I do specialize in small businesses and more particularly real estate investors. And then I know we're going to be talking about some short-term rentals today. I do work with quite a few people that invest in short-term rentals. And it's a ever-changing landscape out there. So we'll probably go over some of the pros and the cons to investing in short-term rentals.
Okay, so it sounds as if you're more into high-end rentals and real estate. Is that what you're saying?
Well, it really depends, right? So one of the things I always tell people, whenever you're getting into real estate, like there's multiple avenues to do this, right? You could get into the single family homes, you could get into short-term rentals, you could do commercial real estate. So it really is all about what fits your goals and your comfortability level the most.
So in terms of you, you said you're very comfortable in this. You find it, hopefully, you see this as your passion. Tell us how you get into. Are you a licensed accountant? Is that, or are you also a licensed real estate person?
Yeah. So my license is actually an enrolled agent license, which is essentially it's a license that is administered by the IRS, and it is a federal license. And that license is strictly just for tax related purposes. And funny fact, I actually live in the state of Texas, and it's actually illegal for someone who is not a CPA. CPA is a different type of license, certified public accountant. Most people have probably heard of it. The CPA license and the EA license are a little different, even though they both carry the same weight in the tax industry. That CPA license is actually for accountants. And in the state of Texas, if you do not have a CPA license, you actually cannot call yourself an accountant. So I actually don't tell people that I'm an accountant. I strictly tell them I am a tax advisor. And if they want more details, then I tell them I'm an enrolled agent. Here's my license number. You can look this up at the IRS website. So yeah, that's just like a little bit about myself. Most people ask like, what is the difference between an EA and a CPA? And I tell them that at the end of the day, they are both just tests, right? Like just because you can pass a test does not mean that you're going to be a good tax advisor or even an ethical tax advisor, right? Even though we do have ethical training, I've seen all sorts of things come from licensed individuals. But the big difference, EA is administered on a federal level, CPA is administered by the state. CPA exams are going to be more broadly based around just accounting principles in general, and they do touch on taxes. And it's a four part exam. You have to take 4 exams to become a CPA. And I've never taken it, but I've heard one, maybe 1.5 or so of the CPA exam, 1 or 1.5 exams of the overall licensing program is about taxes, whereas EA is 3 separate exams, but all 3 exams are regarding in taxes. So a little analogy I like to say, a CPA license is like a mile-long river or mile-wide river, but it's maybe 10 feet deep. Whereas an EA license is more like a quarter of a mile wide, but it's like 100 feet deep, right? So very similar. You can have great, tax advisors that are EAs and CPAs, but they are not the same license.
I love that. You're an excellent teacher. I can see that the way that you break it down. I have so many questions within that, but then you answer all of them. And I do appreciate that. So I've never heard this one before, enrolled agent. Of course,
Yeah.
the most familiar is the CPA, as you stated, and that's pretty interesting in terms of the depth and the kind of a breadth of what you need to know in order to be that. So, is it that you're invited to take this type of exam, or you seek it out through, say, you know, universities, or after several type of training? How do you go about that?
That's a really good question. So actually, I think the minimum education requirement to take the EA exam, I think you only need a high school diploma or maybe even a GED. Now, just because you have that, now, I'm not saying like because the education requirements are lower, that test is literally no walk in the park, and I can say that from firsthand experience. Whereas CPA is a little different. You actually need to have college education. You have to have like, I think it's 150 hours, maybe it's 120. I didn't sit for the CPA, so I don't actually know all the details. So that's like one difference, but you can just sign up as long as you have the minimum education requirements. And maybe like, I think they also do a background check to make sure that you have like the right type of background. Can't be like a felon or something like that. I may be off on that part, but you can sign up and you can study and you can take the EA exam, and if you pass all 3 exams within a certain time frame, then you are licensed. You then earn your license. Now you do have to maintain your license every single year. They call it continuing education. Both CPAs and EAs have continuing education. And then the other way you can become an EA is if you actually worked for the IRS for so many years, you can actually just be granted into that license. If you work for the IRS for X amount of years. I can't remember the exact number now.
Okay, wow, that's even more interesting to know that even at that level, there's access, even say at the high school level, there's access to this type of exam and the way that you prepare to do it. And so you choose that. Why did you choose that route versus say
Yeah.
CPA? I know.
Yeah. So no, that's a really good question. So I went to college. I actually studied finance and accounting in undergrad. I went to Prairie View A&M, so all my PVAMU alumni out there, PV, so yeah, so oh man, so I went to college, I studied finance and accounting, and then I actually went to grad school where I got my MBA. Now, in order to sit for the CPA, you have to have a certain number of credible or qualified hours to actually sit for the CPA exam. And after I was done with my master's, I still did not have enough qualifying hours to even sit for the CPA exam. So it was on my radar, but I did not have the immediate funds or the time to initially just put in to getting those additional hours and then sit and study for the exam. Whereas I could have just immediately started studying for the EA, don't have to take any additional college, I don't have to come out of any more money, and I can get the process rolling much quicker. Now that I have my license, I have considered possibly going back to get a CPA, but where I'm at right now in my career, getting a CPA would only be for marketing purposes, right? I can tell people I'm a CPA instead of telling them I'm an EA and then explaining what an EA is, right? Like that's probably the biggest benefit that I could see to now going to get that license. But it's still kind of up in the air. My EA license is holding just fine for me right now.
Sounds great. You mentioned that the EA is actually federally issued and the CPA state issued. So does this mean then you're able to, there's limitations with the CPA where they can only work within the state it's issued, and then for federal you can go across at the national level?
Now, I don't know all of the details about it, but generally, no. CPAs can work in other states. Now, how do they, is there like a process that they have to get their license to work in another state? I'm not too sure how that works. But CPAs, I do know CPAs that work with people all across the country. So I don't think there's much of a limitation to that. But in regards to EA, yeah, we have no limitations. We can work with anyone across the country. We can work with foreign expatriates if we want to as well. People, American citizens living in other countries.
All right. So I told you sometimes these questions go where you go. So that is so interesting and so exciting. All right. So let me ask you this. For a potential client, someone seeking you out, or maybe, I don't know if you make proposals or whatever it is you can share. I'm layman. I don't know anything. What is it you're
Yeah.
telling me? I'm interested in a property, for example. What would you tell me?
Yeah. So I think I take it even a step further back, right? You know, I'm going to look at the person's situation, right? Do they own a business? Do they invest in real estate? How much income do they bring in, right? Because the higher someone's income, the more impactful certain deductions really are. Like, you know, deductions just whenever you're in the 37% marginal tax bracket, if you can get a deduction there, it saves you a lot more money versus if you're in like the 20 or the 22 or 24% marginal brackets, right? So that's one of the things I like to look at, because when I present my value to someone, I want to know, like, hey, can I actually save you $10,000 in taxes by implementing a strategy? Sometimes it's very applicable. Sometimes it's really not, right? If someone's making like 200K a year, maximizing those tax savings becomes a little bit more difficult. But what I can do to someone who's in a lower tax bracket is I can provide them with knowledge. I can arm them with, you know, how does the tax system work? Whenever you do start to make more income, what are different ways that you can start to diversify your investments to be as tax efficient as possible? And then you also have families that are you know, ever growing. They have numerous kids. Maybe it's an older couple and they have grandkids, right? So I start getting them involved in, like, okay, should we set up a 529 account? There's different ways to go about it. And the value that I can provide to a client really all depends on their particular situation.
So I notice it whenever you mention in terms of interest, or I mean investment or buying, you go right to taxes. Taxes. That's the connection there. That's a whole. I mean, that should be the whole purpose of investment. How much money you're gonna save?
Oh, no, you should invest to make money, right? You always want to make money. If you can make $1 million, but that's taxed at 40%, I would rather take that over making $500,000 taxed at 5%, right? The number is just, you still end up making more money on the first version than you do the second. So number one, we're always going to look to make you money. Number two, then we look at the tax incentives, right? So if you can make $1 million taxed favorably versus $1 million taxed unfavorably, we'll go the favorable route all day. But if maybe that option isn't available and you just have to take the 40% on the million versus, okay, we go this route, you only make $500,000 taxed at 5, we're going to go with the better financial route all day.
Okay, so we're talking big money, but let's go to the, you said something about 529 account. What is that?
Yeah, 529 account is just an investment account that you can essentially get started for. Maybe if you have a child or maybe even like a grandchild that eventually wants to go to college, you can use that 529 account to grow that money tax deferred or even tax free if you spend that money on qualified education expenses. But beginning next year, the Secure 2.0 Act has now allowed people to start rolling over 529 funds from a 529 account into a Roth IRA for that beneficiary. So whenever we start looking at like generational wealth building, the 529 account is a great stepping stone that you can get started and invest for your dependents. And then eventually when they get older and they have earned income, you can roll that money over into a Roth IRA. And you know, that's a great way. You know, that's something that I personally didn't have growing up. But anyone who I work with, I want to instill the fact that the earlier you can get started on investing and compounding that money, the greater chance that you will see really good results.
That sounds good. So in terms of you know, investment or clients coming to you, what is the smallest account or project that you work on in terms of money or funding to the largest account? I mean, how much, you know, you thought you're throwing figures out like $500,000, and I'm sure there's people that doesn't have that kind of money. So tell us what's the smallest account and the
My
largest
smallest account. I work with small business owners that I think my smallest account they profit around 35,000. Which if you're starting a small business, everyone's got to start somewhere, right? So someone like that, I'm providing more educational value and getting like the foundational framework set up for their business so that in the future they can be more tax efficient. But then on the large end, my largest client, they make in a year they'll probably make like 10 million a year. If you want to talk about like their net worth, I think my largest client is pushing like closer to like it's like close to 100 million maybe in like total net worth. But those are also most of my clients are really going to fit into the, let's say, 150 to $400,000 range. Like that's going to be probably the bulk of my clients. But when you start looking at like extremes, the lowest and the highest, probably like 30K up to it's like gonna be like 10 million is around like where they're at.
That's pretty good to know. However, that you also, can start as low as 35,000 in terms of investment.
Mm-hmm.
Right. So what type of suggestions would you give in terms of investments?
Yeah.
As it relates to, say, even real estate or whatever else?
Yeah. Number one, do your due diligence, make sure you're making a solid investment. You always want to make money whenever it comes to investing, right? The tax incentives or taxes is just a piece to your overall financial decision making. So don't overcomplicate it, right? Most people are just great starting off by putting money into a Roth IRA. And then once when you graduate from the Roth IRA, let's look at an HSA or then even a 529 account. You can even graduate over to a taxable brokerage, right? So now you can kind of really start to diversify. And then once when, maybe stock investing isn't your cup of tea, then we can look at real estate. Okay, what type of real estate investments do you like? Do you like single family homes? Do you like multifamily homes? Are you going to self-manage? Are you going to take more of a passive role? It really all depends on the person. But if I had to say one thing, don't overcomplicate it, right? I think people really get caught up whenever they really try to make these complex moves and they're trying to hit the home run. I played baseball in college, right? I will much rather take someone who gets 4 hits out of every 10 at bats than someone who hits 1 home run out of every 20 at bats, right? We're going to go for averages, and that's really where wealth building really takes place is those small wins compounded over time instead of just trying to hit the big home run and hope that you win big there.
So for example, say, this the small guy, the mom and pop, they have some money from, whatever early investments that they had, and they want to invest in real estate. It's like buying a small property, here be it to use as Airbnb, some type of rentals. Do you find that you're getting, type of clients like those? And if they take the passive role, as you said, where they get someone like an investment company or some management firm to run it for them, is it worthwhile? And what's your suggestion there?
Yeah, it really all depends. You have to look at each person's individual goals, right? Some people want to be more actively involved in the operations of the business. Some people are okay with taking a very passive approach. So it really all depends on the person. And I also try, whenever I'm working with clients, I try to really open up their mind to see all of the different possibilities. So for example, one of the big reasons why people love to get into real estate is because of the depreciation associated with it. However, you can access depreciation through other avenues that aren't exactly just a physical house that you collect rent from a tenant. Think of something like a car wash, right? That car wash is an actual business, and it's not an actual building where you're collecting rent from someone who lives there, right? Like this is an actual business, but it's full of all these different depreciable assets that you can use, that you can now go into, you can capture those deductions, and you can possibly use that to offset your income. Every situation is different. You still have to materially participate in that business, but that's just one of the things I do is I like to open up their mind. Maybe they don't want to do physical single family homes. Maybe they want to do self-storage units, right? That's another type of rental income that's a little bit different than your traditional just rental property.
Wow, that sounds interesting. I like that example of the car wash where it doesn't. Okay, so let's talk about then. I guess maybe defeats this question of asking about Airbnbs then, because that's the go-to, I would say, probably in the last 10, 15 years, where many, folks in terms of their income bracket or, being within that $250,000, $400 range may say, this is where I want to put my money. It's a safe investment, especially in relation, and this was the reason why I asked you to come, especially with these new laws that are, local laws in most of the major cities that are saying, no, we are putting a cap on this. So what do you think about that?
Yeah, I think, investing in short-term rentals is, it can be a great strategy, right? It's more of a mainstream strategy. So you'll see more people broadly that understand that type of investment strategy versus like a self-storage unit or maybe even a car wash. And I do see a lot of people that want to funnel their money into short-term rentals. However, one of the things I love to be transparent with people, because if you're going to put your money into some type of investment, you want to know the risks that are associated with that, right? With short-term rentals, the pros are that they're cash flowing assets, right? So you can have an actual asset that other people are now paying down the mortgage to. If you meet certain criteria, you can use accelerated depreciation from that short-term rental to offset other income. So now you're seeing an increase in tax savings and cash flow in that year. So that adds to your overall investment gains. However, you do bring up a good point, because one of the biggest risks involved with short-term rentals is the local laws, right? At any moment, you could have these different individual cities or localities that just put restrictions on short-term rentals. So you have to always be mindful of something like that. Usually one of the things I'll tell people is look for a rental property that you could quickly transition. If that ever were to happen, could you quickly transition this property into a long-term rental, right? That's something I always point at. Not only that, but in the event that a recession were to hit our country and people need to cut back on spending, one of the very first things that's going to go, luxury vacations, right? Which is where a lot of Airbnbs are. So of course, there's that idea of getting a property that you could quickly transition into a long-term rental, or you could look at properties that may not be hit so much by the fact that there's a recession. So for example, I have a client that they invest in short-term rentals, but they look at different military bases that are constantly having these graduations for their cadets, for Johnny and Susie who are graduating. So they just get these very simple single family homes. They don't do anything too crazy to them, because they're just having someone come in to watch the graduation and then they're leaving. And so that's a strategy that you could look outside the box into if you want to get involved in short-term rentals. Like I said, there's so many different ways to really strategize and capitalize on your investments.
Do you encourage this and I know I'm used, for some reason, it's the brand Airbnb, but let's stick with the short-term rentals, because people may be doing it, but not necessarily under that brand, correct?
Yeah. So there's also VRBO. So technically a short-term rental in the eyes of the IRS is just a property where the average tenant the average tenant stays for an average stay of 7 days or less. So simply putting a property on Airbnb does not actually qualify it as a short-term rental. You actually have to show that the average tenant stayed for 7 days or less. So no, you don't actually have to use Airbnb or VRBO. You just have to show the average tenant stayed for 7 days or less. And do I encourage investing like this? It depends. It really depends on the situation. I always encourage making sound financial moves first. And if it just so happens that you have a great opportunity to get this short-term rental and we are projecting that it will cash flow, then I'll probably say, hey, I think this is a sound investment, but I would always want to loop in some type of financial advisor to come in and say, like, oh yeah, no, you should invest your money into this. So I never just straight up say, yes, go invest in the short-term rental. I'll break out the tax benefits and I'll try to provide as many projections as possible, but the ultimate call relies either on the taxpayer or their financial advisor.
So you mentioned that, they have to show, just to show, they show proof or they proving up that they, renting for more than 7 days to fall within that category. To whom? Because if people are trying not to be considered as having short-term rentals because of the tax liability and all those other things, they, if anything, they would try to say that, well, it's only for 7 days or 5 to 7 days and keep it that way. Am I getting this correct?
Yeah, so if you use an app like VRBO, well, actually, I don't even know if VRBO does it. I do know that Airbnb, they will track the total number of tenants that stayed there and the total number of nights booked. So you could just take those two numbers, divide them, and you can get an actual number. Now, if you don't have some type of software that is tracking it for you, then you have to manually go in and actually track it. Now, how does the IRS prove, or how do they know if you are lying or not? It's circumstantial, right? They see thousands of very similar situations, and usually they have like data or some type of software that can pick up on something that seems a little bit abnormal compared to like what industry you're in. So like there's a few ways that they go about it. But are they actually like, do they have a satellite monitoring every activity that you're doing? Probably not, so it really just comes down to documentation and how credible of a taxpayer are you and how credible is your documentation. So if you start giving them documents that don't really line up with your story, you start to lose credibility, and that could cost you in an audit if they just don't believe anything that you're saying.
Okay. So Grant, thank you. I'm going to just summarize to make sure that I'm capturing what you're trying to tell us and that I'm not missing anything that, maybe should that, a question that I should ask that I'm not asking. So you're with Tax Solutions out of Texas, yes?
Yeah, Dougherty Tax Solutions is the name of my firm.
Yes, and you clearly give us a distinction between CPA and EA, and I've never heard of it, so thank you for that information. And that's what you are. You're an enrolled agent that is federally assigned. So with that said, you work with clients who want to invest, and I would say it seems as if it's large investments. So I'm trying to connect this to, because you do post a lot about real estate, and I'm trying to connect what you do as it relates to real estate. Yes.
Okay.
And other investment, but there's more than that. It's not just real
Oh, yeah.
estate.
Yeah, I work with a lot of real estate investors, but every situation is different. I work with a lot of small business owners that have, let's say, a laundromat, right? Laundromats are its own business, but usually they are in some type of building, right? So maybe they own the building, maybe they're renting the building. Every situation is different, but yes, I do work with a lot of different real estate investors.
And so for a typical client coming to see you is mainly for investment purposes and other tax related advice. And so you can take them in whichever direction it is in order to, as you mentioned, investing their money in 529 or Roth accounts and other major investments across the US. And you said there's other expatriates who may be interested in these things. So that's the clientele that you did. And mostly it seems, just from the way that you're sharing and the numbers they're using, it appears as if these are some high-end clients. So that maybe, even though you're saying, yes, you may find someone that with a laundry store who wants to do, just to, increase their income in some ways and to find ways to invest for their kids and their grandkids and so on. So are we on the same page?
Yeah, we are.
Okay, cool. So is your question then with all of this, is there a question that you think, well, you should ask this if you're talking to me as an enrolling agent?
Oh man, I get all sorts of questions. One of the more common ones is going to be, how familiar are you with audits, right? That's actually something that actually comes up quite a bit is, how familiar are you with audits? What is your experience with them? Another question I get is, so if I have someone who's specifically looking for short-term rentals, they will ask questions directly associated with that. Like, how often do you work with short-term rentals? Do you understand how the short-term rental strategy works? Then flip it over to like real estate professional status. I'll get questions directly about that. What are some other questions that I get commonly? That's a really good question. I don't think I was prepared for that one, but
That's so let's do this. Let's look at the one that you just mentioned in terms of auditing, where
mhm.
a client may come to you and say, how familiar are you with auditing? And maybe my question in that will be, well, why are they so concerned about auditing, and what could be going wrong or right in that area?
Yeah, it depends, right? I've had people who are very hardworking people. They just went through a really nasty audit, right? Because those audits, they really do get into your life. They want to see all your bank accounts. They want to see receipts. They want to see all sorts of different things. So it gets people very flustered, and just going through that process can be not very fun at all. So, I get asked that a lot. I wouldn't say that they're trying to do anything sketchy. It's usually because they just had a bad experience with an audit, or they know someone who had a bad experience with an audit. And so that's usually why the question comes up. Very rarely do I have someone who is doing something sketchy and then they're asking me if I can protect them in the event of an audit. Because if I find out that you're trying to like cheat the system, I probably won't work with you, and I'll do it in a very professional way. I'll find a way to say no, but usually that question only comes up because of past experiences.
What is a red flag that maybe just show itself up in when you're engaging with a client or a potential client in that
Oh,
space as it relates
all
to investments?
all sorts of different things, right? If you're talking bad about your previous tax preparer or tax advisor, depending on like what you say, right? So there's the typical pain points that I see, right? So they're not very responsive. They don't provide planning. Okay, like I get that. But whenever you start talking about I don't know, just very, very small, insignificant things like, hey, they took too long to respond. I'm trying to think of like something off the top of my head, but there is a difference between someone who has legit pain points and now you're just kind of complaining and you don't seem like you're someone who can be pleased very easily. I'll probably stay away from someone like that. And then some other things are going to be, I've had people legit come up to me and just straight up say like, hey, I'm trying to deduct my entire life, right? And so if I start to go through the process of telling them like, hey, that probably won't work, here's the court case to kind of like support what I'm saying, and if
Mhm.
they're not really receptive of what I'm genuinely just trying to give them, that'll probably be another red flag. Like, okay, I probably will want to stay away from someone who openly said they're trying to deduct their life and they're not really taking no for an answer.
So you're playing a dual role in a sense. Is that a fair statement?
Mhm. Yeah.
Because you have to weigh your responsibilities in both area. Which one seems to be having a heavier load than the other in terms of and is it welcoming for you?
Yeah. Oh, I'm always going to be on the side of the client versus the IRS, right? Or the government. Now, there is that fine line where if the client is wrong, I need to tell them that they're wrong, right? Because my license is also on the line if the IRS finds out that I was assisting this taxpayer in, any type of fraudulent scheme, right? So I'm always going to be on the side of the taxpayer until they really are wrong. And then I'll just kind of step in and be like, hey, well, we don't want to go that route. Like we could really get into some trouble, or like that's not going to work the way you think it's going to work. So yeah, I do play that dual role, but I'm still going to be on the side of saving clients money first.
But also in terms of the dual role, maybe the question could be, where do you find more projects in terms of the roles that you play? Is it more towards investments in real estate or other ventures, or is it towards tax and tax preparation, or helping people?
That's if I had to put one, I probably spend more time preparing tax returns than I do actual planning, just because tax season is nuts, right? Like there's just so many tax returns. Right now, there's actually a stat out there, and I can't remember exactly, but there are more people that need a tax advisor or tax preparer than there are actual tax preparers and tax advisors. So during tax season, it can be a lot of work, and I'm just sitting there just cranking out tax returns nonstop. And then in like the summer, and then after October 15th, that's more of like when I really get to spend more time going through planning initiatives and strategizing with clients. But if I had to say that I do one, like which service do I do more, I probably for sure spend more time preparing tax returns, which is something that I want to get away from. I want to start hiring on more team members so that they can specialize in tax preparation. Now I get it. There's all tax preparation is its own beast outside of tax planning. Like those are two totally different beasts. So you have certain skill sets inside of tax preparation. And so what I'm going to try to do is I'm going to try to hire specialists that are very good at a set number of skills in tax preparation and slowly build my team out that way.
So are you saying at this point you are a solo practice?
I am a sole practice. I do have contractors that handle certain administrative tasks, but any type of tax planning or tax preparation, I'm the only one that handles that.
Okay, so NBA is not an easy task it's not an easy, what do you say, degree.
It's not easy. It's not easy to get, yeah.
Get. And so I would say it's the creme de la creme of anyone going into that area. So, are you like a rock star with your alumni group and among that group or something like that?
Um, if I'm a rock star, it's because of what I did in college, not because of what I do now, right? So I had a lot of fun in college. I made a lot of really good, close relationships. I played baseball in college, so I had some, great times. But yeah, if the people from my alumni think of me of a rock star, which I don't think they really do, some probably do. I don't really know. It would be because of what I did and because of like how they actually know me, not because of like the work that I do now. I wouldn't even think a lot of people that I went to school with even know what I do, as ironic as that is.
Okay, so in your neck of the woods where you're located and doing this kind of work, how diverse is your client? And diversity can be in anything. It could be in terms of socioeconomic background, and I think you touch on that, but other areas.
Yeah. So I'm based out of Houston, Texas, but I would say like 60% of my clients come from California, New York, or New Jersey. I kid you not, those three states make up the bulk of my clients. And I would say less than 10% of all of my clients are actually from Texas. So that's a little interesting fact. Most of the people I do work with are going to fall, they're going to be making like over $150,000. But it's all sorts of individuals, all walks of background, right? I work with vets, I work with people who are teachers, right? All sorts of different walks of life.
And for those Americans living overseas and they're ready, they want to invest, or even for investment overseas, do you do that, or it's just within the US?
Oh no, I help with investments overseas. Like if you want to get a rental property in like Cancun, Mexico, I can definitely help out with that.
Or even buying, I mean, not just, well, when you say getting a rental property, you mean buying a rental or purchasing one or
Well,
investing.
so I would help with the tax implications of making that decision. I won't actually like be there to help you sign the papers or help you find the property. You know, you're gonna have to do that research on your own. But once when you find the investment and you can bring the numbers to me, I can crank them out and let you know, hey, this is what you'd be looking at if this situation were to happen or something like that.
Okay, fair enough. And so the individuals that you work that are Americans that are overseas, where do you find they're living overseas or they may be working overseas? Where do you find that they're trying to invest maybe in geographically?
Ooh, that's a good question. So I have a few people that invest. Oh, I can't even remember what country they're from now. I want to say it's Sweden. I can't, I really, it maybe it's Switzerland. So they used to live in Switzerland. I want to say it's Switzerland. Then they moved back over to the US, but they still have properties
Mhm.
over in Canada. I work with some people that were once Canadian, and then they moved to the United States. They still have properties out there. So I don't work with enough expatriates to really say like, hey, they are looking to invest in this geographical area. Um, it really all depends on what they are familiar with. So like, it sounds kind of cheesy, but one of the if you ever talk to any lawyer or any tax advisor, their favorite response is going to be, it depends, because every situation is so different. Like, and it's one thing to say it right. And whenever I was like going through the training process, I used to hear it all the time, and I'd be like, okay, it depends, but like, how much could it really depend? It can depend a lot, right? Like every situation. Once when I really started to get involved and start to see how different every person's situation was, that's when it finally clicked and it's like, oh yeah, no, it really does depend.
So, for example, you mentioned that you have clients in New Jersey, you have clients in California. California, right now, if we're looking at environmental factors that is impacting, the geographic region with the fires and the flooding and all those things. I mean, and you're talking to a client and they say, well, I want to invest in there. Is this something? Do you do a scope of the landscape to say, is this something, or do you go beyond that? Or you or
Oh
for
yeah, no. What I can do is there's different ways how you can look up to see what the average rent is in a certain area or how much of a risk a certain property is in a certain area. So there's ways how you can kind of do that homework and get a risk analysis of where you are investing. Um, Now when it comes to like California fires, right? There is a part of like luck, right? You know, sometimes you just really are unlucky and your property does get burned down. But you, as long as you know that the potential is there, because like for example, in California you have fires, but here in Texas we have flooding and hurricanes. Same thing with Florida, Louisiana, Alabama, and then all along the coast, right? When was it? Was it last year or 2 years ago when New York City just got absolutely flooded? I don't think people really were expecting that, right? So there is a factor of the unknown that can be kind of hard to account for whenever you're looking at, different prospective investments. But there are ways how you can account for, how risky of an investment property you are getting yourself into.
so the risk management aspect of what aspect of it, anything that involves what you do, is this something that penetrates the business or you refer that out?
What do you mean by penetrate the business?
Well, is this something that you engage in? Like you talk more about the risk, is like you start from the top to the bottom about the risk
Oh
involved,
yeah.
the liability, or is it something you said you refer to some of your clients? Is it something that you refer to like a risk management asset specialist, something of the sort?
Both. I definitely offer my my
Expertise?
Yeah, expertise. I don't know. I was gonna say opinion, but opinion is probably not the right word. I do offer advice
Mm-hmm.
based off of like if I think a certain investment is risky. And I try to bring up all of the possible risks that could be associated with something, but I do like to bring in different financial advisors to really kind of come in and just help compound my decision making because I'm not a licensed financial advisor, so I cannot legally tell someone you should go invest in this property, right? So like that final call really does need to come from someone who is licensed to do that. But I still try to help my clients out the very best that I possibly can and give them as much insight as I can.
So it seems as if most of what you do in terms of investment advice has to do with physical structures then?
Oh,
And
it depends. You know, sometimes people don't even want the physical structure. Sometimes they just want land because they are acquiring land in hopes that maybe some developer comes along, buys it from them, and puts a building there themselves, right? So there's different ways to kind of go about it. But if I'm going to look for an asset that they can use for tax advantages, usually it will be some type of structure because land unfortunately can't be depreciated. And so whenever we're looking at like, hey, how can we lower your taxable income? That depreciation is a big factor whenever it comes to like, hey, can you use this to lower your income? So we do look at physical structures, but sometimes I've had people who 1031 exchange a physical property for an empty piece of land because they know that that land is going to eventually get developed and they can sell it and make a ton of money that way, right? So it really all depends on the particular situation and what that client is looking for.
okay, so in terms of gender, who do you find? You find mostly men that's coming in and say, I have this amount of money and I want to do this. Are they married, or do you find a lot of women, single women, married women that come in and say, I just want to do this all. I just want to be this you know, a high-powered individual to do my own thing. What
Yeah.
your clientele looks like. And I'm not saying you should give out your secret, but just in general.
Yeah, no. I mean, that's a really good question. It's pretty evenly split. So I actually don't have an exact like number of like how many are male, how many are female. But if I look at my like for example, if I look at my social media, there you can look and see like, hey, what percentage are male, what percentage are female. And currently I'm pretty even. It's about 55% male, about 45% female, right? So that's actually a very pretty close even split. I work with a ton of married couples. Um, Now, who is the main point of contact? It really all depends, right? Because sometimes, the wife is the main money person, so that's who I would be communicating with most. Sometimes it is the man, and that's who I communicate with most in situations like that.
Mhm.
Um, I wouldn't say if I had to say it probably is more male just because of like my social media is just slightly more
Yeah.
male over female. But in the grand scheme of things, it is very evenly split, in my opinion. I definitely don't have just an overabundance of one over the other.
Do you find partnerships coming in,
Yeah.
strangers doing partnerships, not so much married couples or just individuals, but people just coming in? Because one of the things I came across in another interview that I did was where somebody shared about they having created LLC together, and one partner decided to stuff money in their pocket versus deposited money in those things.
Ooh.
I don't know if this is beyond your scope, but and that created some tax issues, and of course both parties were become responsible. So in that
Mhm.
case, now when you're doing investments or coming to talk to you about like as partners to invest, where do you go with that? Do you even get into any of those stuff? Like well, clearly the legal stuff, maybe not yours, but do you try to find out?
Yeah. So one of the things I will talk about a lot whenever it comes to like partnerships is an operating agreement because in that operating agreement you should note out who are the different partners. how much percentage share of the profit are they going to get? One of the things I actually tell people is that, okay, so a partnership is a flow through entity. So the partnership could profit, let's just say it profits $100,000 and me and you are 50-50 owners. That means that I'm responsible for claiming $50,000 of that 100K on my tax return as profit, and you have to do the same. However, the partnership does not always, so that the partnership makes money, they don't always distribute that money back out to the partners, right? And so because they want to keep it in the business to invest and continue to grow that business. But what I will tell people is that, okay, depending on what your share of profit is, you have to pay taxes on that. So you should put in the operating agreement, hey, the partnership will at least cover your portion of the taxes from the profit, and we will distribute that to you so you can pay your share of taxes, right? That's something that I see a lot, is that these partnerships just make a bunch of profit. The partners now have to claim the profit on their tax return, but they didn't get any money from the business. So like they are now paying out taxes on money they never technically received, even though the business did receive it, right? So I hope I explained that right, but you should have something in that operating agreement showing that, like, hey, the partnership will make a distribution to each partner to cover their tax liability for whatever the profit was.
But in your role, are you saying that you literally need to see that, or only if such an issue comes up?
I only need to see that if I'm filing their tax returns, because now I need to, see everything to make sure, like, okay, if you're telling me it's 60-40, but in the operating agreement it's 50-50,
Right.
I'm going to go with the operating agreement. So I don't necessarily need to see it if we're just like going through strategizing. I will probably just ask to make sure you have one, but whenever it comes to actually file the tax return, usually then I'll ask to like see, hey, can I see an operating agreement showing the distribution of the profit?
So what's the youngest in that you come across that maybe making some big money and
young person?
Yeah.
I've worked with 18 is actually the youngest one that I've worked with. Yeah, there was a girl who I worked with. She was she's now a little bit older. But when I first started working with her, she had like just graduated high school. She was 18 when I first started working with her. And have you heard of Airbnb arbitrage?
No. What is that?
It's another type of way to like get involved in Airbnb without actually owning the physical property. So it's they call it Airbnb arbitrage, but she was doing that and she was making an absolute killing off of Airbnb arbitrage.
Wait a minute. Is this, maybe I'm thinking of it in a different layman term. Is this, I think I initially sent you that question. Is this where the individual does not own the property, but rent the property and then re-rent the property?
Yes, that is Airbnb arbitrage.
And I did say to you, if it's a low down dirty thing, that's the term I used.
I probably just misunderstood it.
What do you think?
What do I think about that type of business? It can work. It can work. It's like any other business involved with that type of industry, is that it is very prone to risk. So if there's a recession, people are going to stop going on Airbnb trips, right? They're going to stop going on vacation. So that, you are risk prone to something like that. But I've seen people make it work. I've worked with a handful of people that do Airbnb arbitrage, and so it can be profitable.
That is pretty interesting because I've heard of it. I didn't know that was a term that was used. I just, in other words, I explain it with a lot of words, but now you're using one word to describe it. And so that makes sense. So you're saying this is legitimate business. It's not considered. Yes.
Yeah, as far as I'm concerned, there has not been any legal authoritative action taken on that type of business. So, but yeah, no, it's perfectly legal. Now, of course, you can't do Airbnb inside certain areas that don't allow it, right? So you got to watch out for that. But yeah, no, that's an actual business, and I've seen people make money off of it.
That is pretty interesting. Wow. And so, well, then the next question would be, will the local laws for the short-term rentals, the new ones that are put in, especially in these major cities, will this impact the arbitrage type of a model of
Oh yeah.
investment?
Oh yeah. Yeah, if you are currently doing Airbnb arbitrage in a city like Dallas, and then Dallas comes in and says no more short-term rentals, that would directly impact their business.
Okay, so we're down to our last 4 minutes. And with all that we've shared, I'm going to throw this question again with you. What is it I didn't ask you based on, you know, what came up within in the second half of this interview?
Yeah. What is, what is the most fraudulent thing you've ever seen someone do on a tax return? I look, this era of COVID, so there were all sorts of tax credits available for business owners during the time period of COVID. The most recent one is the employee retention credit. I actually did not really dabble too much in the ERC because I knew it was just prone for so much fraud, and I knew the IRS was going to eventually. Well, I didn't know. I had a very strong feeling that the IRS is going to crack down on this. So I found trusted advisors that I could send them to if they felt like they were qualified for ERC. But even before that, back in 2020 and 2021, there was a credit called forgive me if I misspeak on this one. I think it was called the sick leave credit. It was only for 2020 and 2021, and it was for small business owners who essentially had to miss work because either they got COVID or a family member got COVID or whatever the case may be, COVID related. And there was one guy, I was reviewing his tax return, and he had it was like an unbelievable amount of days. It was like 50 or 60 days that was claimed for this credit on his tax return. He got like an $18,000 refund. So I just simply asked him, I was like, oh, hey man, it says, you claim this credit for, did you get COVID last year? And he was just looked at me, he was just like, no, I didn't get COVID. Like, what are you talking about? Like, why would you ask me that? And I was like, oh, well, it says here on your tax return that you had COVID for like 50 days, like, and you claimed a massive credit. So that would be like something that I've seen, that was clearly fraud. Whoever was preparing his tax return knew what they were doing, and they just put that in there so they could get him a refund. So, and there's been a few other things,
That's
similar.
actually, I find that fascinating because I guess maybe I missed out because I've never heard of that one. So you're telling me
2021.
the federal government allows people to claim employment retention credit, because if you're sick and out with COVID, you can say I was sick for 90 days, I couldn't work, and so you get tax credit for that. That's what you're telling me.
So the ERC, the employment retention credit, that's a little different. That's all about, did you keep your employees during the COVID downturn, and did you experience a decrease in business? Very generally summarized. The one I was just telling you about was the, I want to say it's the sick leave credit.
Okay, sick leave. Okay, something like
I want to say, yeah, and this was 2021 and 2020. So I may be off on the name, but it was the sick leave credit. And that was for individual business owners who, may have missed work because they were sick with COVID.
Yeah.
Now, here's the thing, you got to have a doctor's note. So if you don't even have a doctor's note, you really are kind of running a risk by claiming that credit. And this guy, he didn't even have COVID. So I don't know where they came up with the numbers from, but yeah.
It's a racket. I mean, I'm telling you, it's so easy to get a doctor's note nowadays. I mean, they're even printing them off online. So it is possible. That is interesting. This is so informative, Grant, and I do appreciate the spirit and the passion. And do you have a physical location, or are you the fact that you have become so good at this, you're just doing it from home and you're talking to people?
Work out of my home, but I do eventually want to get my own brick and mortar location.
Oh, okay. I'm very excited about this new information that I'm learning here, and I appreciate you taking the time to do this. And of course, definitely, I see, yes, your numbers are growing online, and I will definitely be sharing most of this. This is a new area, and I'm going to also share this with people I know. I never heard of the EA before, and this is an interesting piece. Any last word though? We're almost there.
If you guys want to follow me, I'm on Instagram at Dougherty Tax Solutions, and I'm also on Twitter at DOU Tax Solutions. So it's Doe Tax Solutions. So you guys feel free to follow me. I'm always giving out free content on there.
Well, thank you so much, Grant. I appreciate this, and hopefully we'll stay connected. Take care.
Thank you. It was my pleasure.
Bye-bye.